Good now, revolutionaries, and welcome to the Rise Up Morning Show. Today is Wednesday, September 24th, and indeed, we're back for another helpful episode of Rise Up, the Rise Up Morning Show. It's your place for news, commentary, answers to your crypto questions. And today we have got an awesome interview with our friend James, co-founder and CEO of DefiCarrot. But first, you've been asking, and we've got to tell you, Jerome Powell spoke yesterday. And some people in the audience are a little worried. Apparently, Donald Trump also spoke yesterday. But we know more about the substance probably of what Jerome Powell had to say. So Will, as people are worried, can you put them at ease? And also, how are you this morning?
I'm good. I'm a little upset that Alex did not get the plaid flannel shirt memo that we all sent out before. And then, you know, I would be mostly buttoned, Evan would be unbuttoned, and then Alex was supposed to be somewhere in between. So, you know, he didn't get it.
It's
fine. I'm convinced that Alex doesn't actually know how to read because the second book of Red Rising really isn't that great.
Don't tell anyone.
I don't think he knows how to read. So anyway,
wait. You just can't let that go unchecked. I have to let people know that backstage, you came after my flannel shirt because you said, what did you say? You said, do you actually?
I said, do you even have a single button buttoned on that shirt? I think it was something along those lines. I can't remember
I just want the whole record to show. Look at all these buttoned buttons on this shirt. This is
It wasn't that way in the backstage. He was definitely just underneath, just getting the last few. I like to imagine just the single bottom button was buttoned. You know.
And Alex, for what it's worth, my mother says modest is hottest, and I know it's sweltering where you are. So literally true.
Yeah, well, hey, Evan doesn't know how to put on a shirt and Alex can't read. So that's why I'm here, guys. I'm here to just keep this whole thing together. Anyway, yeah, Jerome Powell. So Jerome Powell had a speech the other day, and it was just more Jerome Powell. It was him being like, hey, we're concerned about inflation still. Tariffs are affecting inflation. We're still just keeping our eyes on that. The labor market is weakening. That's our biggest concern. That's why we cut rates. And we're going to watch the data as it rolls in and make decisions based off of that. He did say one thing, though, that was it looks to him as if stocks are a little overvalued. And the stock market did sell off yesterday, but the stock market from a technical analysis standpoint also should have sold off yesterday. So, did it happen because it was Jerome Powell, or did it happen because the market was going to do it anyway? Who knows? But that was Jerome Powell's speech. And then President Trump had a speech also. None of it had to do with anything financial. He was at the UN. So Why would it be about anything financial?
Why would it be about anything other than just yelling at every other country in the world and inspiring lots of talking heads to threaten violence against the entire United Nations afterwards?
Yeah. And so that's... Yeah, because Trump was talking about how he doesn't see why the United Nations is really a thing and that's really ineffective. But then he backed it up by being like, but the United States still supports it. I was just like, oh, okay, interesting. And then he talked about immigration. He talked about his actions in Iran. And he talked about how, war and conflict is creating more immigration problems. Oh. And that was it.
I see the quote here. Your countries are going to hell. That's I did not know it was such a fiery speech.
Powerful opener.
Interesting. Okay.
Yeah, I mean, but and then at the same time, Poland threatened Russia, which so it was just kind of just set the stage for it all.
It's just sure. It was
and then Trump did say, he's like, and I believe Ukraine can beat Russia and take all their territory back. And I was like, oh, that's kind of interesting that he said that.
Well, he indicated that he finally learned what's going on over there, and then now he believes that. So.
Yeah. So that was it. And that was President Trump's speech. So if you are on crypto Twitter, and if some of you aren't, you're probably better off. But, there's some really good resources there still, though, just like on TikTok and Instagram. You got to sift through the crap to find the good stuff. But a lot of people were combining the news from Dennis Porter, which, oh, by the way, Dennis Porter is a friend of the show. He's a good guy, and everything that he does really does help Bitcoin in the long term. But this was not a good look. This was not a good look, Dennis. If you're watching, man, hopefully this is a lesson. Because I have this huge announcement, and it's going to change the political landscape and future of Bitcoin in this country. And then he announces this guy who's going to run for governor in the state of California, who's pro Bitcoin, which is, I mean, nice, but he's going to get his ass kicked by Gavin Newsom. You're not going to beat Gavin Newsom in a governorship race in California. It's not going to happen. So it was just like, hey, I'm endorsing this guy and he's going to run, and thumbs up. And then everyone was like, oh man. And so now there's been a slew of people on crypto Twitter just blocking Dennis Porter. And I'm just like, oh man, Dennis.
It was a tough day for Dennis Porter.
It was a tough day for Dennis Porter.
So, Dennis, we say,
don't come for me.
For you. And also, he expressed that he believed that the news was bigger than people seem to understand it to be, saying, I'm sorry they don't understand what's at stake and how to avoid the pain. I'm happy to put my name on the line, and I will do it again. So I was like, okay.
I will absolutely die on this hill.
He's
I respect that. I can respect that a little bit.
He sees the vision. We're here behind him.
He is just so passionate and so excited. And sometimes, when you're that into something, when you're that involved in that, in the trenches of whatever it is, it can be easy to miss that not everyone has as much context as you do. Not everyone is like as read in, and not everyone is as excited about, the little stuff.
Alex, I don't think you could have given a better segue. Speaking of people who are involved in the trenches, today's guest is a front row builder for Solana DeFi. And this is a perfect extension of the conversation we started yesterday. If you missed it, don't fret, don't sweat. We've got the recording on your favorite platform, but we discussed how, if you are a beginner or a level 1 user, do you start exploring or go deeper into DeFi? And I do not think we could have had this conversation at a better time about user experience, about practical, tactical, 1, 2, 3, how do I start? So without further ado, I need to introduce you to a man who bought Bitcoin in 2011, someone who knows the author of Red Rising and CEO, co-founder of DefiCarrot, our friend James. Ladies and gentlemen, please welcome him, aka JSB, to the Rise Up Morning Show. James, you snuck that in the private chat, dude. We had a whole feud yesterday, the Red Rising themed episode. You've got to start there. How do you know the author of Red Rising?
We played sports in high school together.
Oh shit, that's dope.
That's so
cool. And in fact, when Red Rising came out, I remember like seeing news about it or something, and I was like, I know that guy. He's writing books, because he was honestly just. I'm sure Pierce is great now. Just he was not the book writing type. I would have said. So it was a little bit surprising, but thrilled it's gone. So it's on my reading list. I talked to a friend of mine from high school the other day. He's like, "Have you read it yet?" And I was like, "No." And I'm a big sci-fi, fantasy world reader. I just finished all the Sanderson novels, and was looking for my next one.
All of the Sanderson novels?
Yeah.
Oh my god.
I went to a cruise through all of Asimov, through Sanderson, Dune, Shogun. Yeah, I like the long stuff. It's the good stuff.
Shogun is one of those books you take with you to the wilderness, so that like if you run out of toilet paper after you read the first 3 chapters, you survive.
That book could have gone twice as long, and I would have been happy.
I would have been so ecstatic. That was the first book where I threw the book down on the ground, went, "Oh shit!" and I like walked out. I like ran out of the room. I was like, "Oh!" I remember it. I was in like middle school, and I was like, "What the hell?" With like my bowl cut and like Star Wars Death Star T-shirt, and I was like a little fat too, and my cargo shorts. It was great.
Yeah. Let's also pair that cool fact of knowing Pearson, and I did not hold that Bitcoin in 2011. In fact, did not hold that. So that's also the fun fact of most people I know, at least who are around me, and we did that, did not make any money off it.
Mm-hmm.
Well,
here we are.
That's okay. Here we are. We didn't bring you here to talk about those things. We mostly want to get your perspective and give you the chance to get some perspective on other people's experience with decentralized finance. So do you want to start by just telling us a little about who you are and what you and your team have built?
Yeah. So I'm James. Go by JSD online most places, as a lot of us have various names that we go by online. Funny online world we live in, this anonymous Twitter world. Yeah, that ape. Is this Degen ape NFT mix that actually got me back into crypto.
He's like our friend Nikki Scanella. He's rocking.
Yeah. Nikki's a good friend of mine, actually. Nikki actually ran this project for a while, and that's how we know each other. Like for a while, I was aware of Bitcoin, thought it was cool, but wasn't a believer, I'd say at that point. And Ethereum came along, I was like, okay, this is exciting. Like this is like programmable, like we can do stuff with it. Like this is actually, this is cool. I'm a developer by trade. And I started to explore the EVM space, and I was like, this ain't it. If this is the future of finance, like it's not going to happen. And kind of abandoned it for a while. And I ran sold a business before, and I started a digital agency because that's what I love doing. It was just like helping companies figure out custom software and how to do the web right and stuff. And I did that for about a decade, and I got really bored. I saw Solana kind of come up and checked it out. I was like, okay, this is it. Like we can actually do stuff here. Like it's the speed. Like this is, I can see how we can like build useful applications here. And NFTs were going hot, and so I was bored, got into it, ended up kind of stumbling into finding, online community in a way that I hadn't really done before, and had a ton of fun, was learning a ton. And I guess about a year after that, I went full-time, shut down my agency, and went full-time into crypto, and have really enjoyed it. First thing we did was NFT based. I'm glad I'm not doing that anymore. And my co-founder and I, you just had this sense and feeling of we're both really technical. We're both, builders and had built some stuff together, and felt that, man, even for us, DeFi was confusing and kind of like unapproachable, of like, man, there's like so much FOMO. Like you would read a thread that some influencer put on Twitter of like, it's so easy, get 80% APY, do this, go here, split here, deposit here, loop it there. And you're like, okay, I'm gonna log in, and I'm gonna follow this. I'm gonna like do the steps. And then you're like, where is it? And you had this experience where like the money left your wallet. I think this was like my most disconcerting thing. Even as someone who was like into crypto, knew what was going on, written smart contracts, even for me, just this idea that I no longer had visibility into where my assets were, just kind of spooked me out a little bit. I can't tell you how many stories of friends I know that have years later been like, oh, I forgot about that. Oh, I got 10 grand sitting over there. You're like, excuse me? Like, who are you? Like, you just forgot that it was over there. And not that like you put $10 and now it's 10 grand. It's like, no, you probably put 30 grand in and now it's 10 grand. And you're like, oh, great. So
free money.
Like the experience of, yeah, right. Tax return, free money. No. And so I just like that experience has always really bothered me, and it felt like a huge barrier of like, hey man, there's so much opportunity. And if we really want to get DeFi to a place where we no longer call it DeFi, it's just personal finance. It's just finance. There's no difference there. You don't ask your bank what database they use. you don't care. We set out with this mission of like, hey, how do we make DeFi easy and accessible for everybody? And for us, the big first thing was, man, in crypto, the base layer UX for everything is token. It's token ownership. What do you do when you join crypto? Like, okay, you got to figure out this wallet thing, this onboarding thing, yes. But like the first thing you're going to do is like, you got to own a token. That is the core wrapper of everything we do in a blockchain is like the UX of a token. And it made a lot of sense for us of, hey, what can we do to make what we now call like tokenized DeFi? And that's really where our idea for Carrot was born. Our primary product, and it's what we're known for, is called CRT. It's our Carrot token. And all it does, I shouldn't reduce it like that, but essentially what it does is it's a lending aggregator. If you've been around, you might have heard of DYOR. There's several other like OG yield aggregators that basically said, hey, there's a lot of banks in the world, and what if every day we could find the bank that had the best rate and like make sure you're getting it? Pretty simple premise, right? Sure. And the thing with crypto is there's a lot of banks and the switching costs are pretty low, and so your ability to do that is possible, whereas like traditional banks, you couldn't do that. Now, most people don't realize that most banks are already doing this on the back end. Like that is how a lot of bank networks work, right? Your bank isn't underwriting all the mortgages that's paying the interest in all your savings accounts. it's a network of banks behind the scenes that are aggregated and moved and stuff like that. And the great thing about Solana versus a lot of EVM solutions was in Solana, like we can do stuff really fast, and we can be reactive in a way that you can't quite do in the EVM environment. Rebalancing is expensive on a lot of those chains, and so there's some methodologies and things that are tough and challenging to do profitably that become really, really easy and possible in Solana. And so that was the first idea for our first like tokenized DeFi product was CRT of, man, you deposit, we take those money, we route it to different lending venues, over collateralized lending, which is kind of the stalwart of DeFi lending. And when a better rate is somewhere else, we get it. And we wrap that in a token. And so the token just goes up. It's great. It's like, honestly, this is our main primary marketing thing is just, I show you the chart and look, hey, the chart literally only goes up. And we find that that's a great form factor for people to kind of get introduced to it and say, okay, great. I'm not in the casino. I understand where the yield's coming from. So these are main questions. Hey, where's the yield come from? What's the risk? And what can I really expect from what you're doing? And token price, super transparent. I can't hide it. The history is the history of the price. And so anyone can log on, see that and say, oh, it's like a token. If you came to Solana for a meme coin, you can also come to Solana to like get, excellent yield on your dollars. And so that's how Carrot was born.
Beautiful. And people who are unfamiliar with some of these terms, I'm just going to quickly throw them at you. Over collateralized means how much is this backed by other forms of value? And if you're not familiar with these kinds of tokens that represent something else, all tokens represent something else, you might remember our episode with the other Solana DeFi project that Nikki runs.
Yeah.
They use MSOL, which is a reflection of the value accrued to the SOL staked. So just like this screen share I'm doing here, where, like James said, the price literally always goes up. They also have sort of a mechanism like that is not a reflection. It's not like I better go sell my house and buy this particular token because it's going to go to the moon. No, it's accruing the value of the underlying assets over time. It's a simple kind of done for you thing. And that was something you said right before we got started and this whole conversation I think is just a perfect continuation from yesterday, but you said it's really about how to provide the right thing at the right time to the right user. And guys, really, truly, could we have a more perfect continuation from yesterday's conversation?
No, it was like the perfect 24-hour segue.
Yeah. Alex, I'm curious to get your thoughts, especially because we were talking about, user experience, and you've got this hot take that we don't have a user experience problem, but it sounds like this does address some shortcomings of what we defined as user experience, and also maybe does some of the work of helping people get into a DeFi environment for the first time. I really especially thought of you when James said it won't be called DeFi one day. It'll just be called finance. Just be what we do.
That almost makes me a little sad because
back in my day.
I just that would be like, that's a piece of the whole thing that I feel like is worth accentuating and like worthy nuance, just because even in crypto, right, we have like super centralized stuff that you'd want to know that you'd want to know like which side of the fence you were playing on. I wouldn't be upset about it if like some terms 100% absolutely. I don't think DeFi.
But let's pick that apart a little bit, because I think what we might intend to mean when we say DeFi is really the benefits of DeFi, of like transparency, verification. When we say decentralized, what we're hoping for the decentralized is censorship resistance. It's actually my ownership, of it. Some of the benefits that come with that without all of it. And we're going to get into this because one of our angles is like vertical integration, where we say, hey, like we want to be more like Apple in terms of how we build thoughtful, vertically integrated products that benefit full stack for somebody, not just building little components and hoping that other people come in to build other parts of the stack and we just plug in and integrate. We just own our own one world, like which feels centralized. It's not, I would argue, from a user perspective. But what's your sense of when you say DeFi and that makes you sad for us to like lose that? Is there like another layer, like which parts of DeFi do you feel are worth continuing to like elevate and like make sure people understand that this is better than where we're coming from?
Yeah. So I think for me, the piece is it's the ownership part. It's it's the custody part, because let's take Coinbase for example, and let's take, I don't know, Aave or Spark or Morpho or any one of those, for example. So Coinbase has a cool feature where if I hold USDC on their platform, they're going to pay me 4-point-something% APY, and that's badass.
No, they're not. They don't call it APY. It's a reward. Very key.
Thank you.
This is not interest.
Good nuance. Yeah, we can all shake a fist at the SEC.
Yeah.
I'm looking at you, Kraken. So in that sense, right, like for me as the user, the experience is that I get to hold some money there and I get to earn a better interest rate. Meanwhile, I just got my interest rate statement. I love pointing this out. I do it every year because I will never miss an opportunity to make fun of USAA. I just got my interest statement for my savings account with USAA, and I earned, brace yourselves,
$1.20.
Oh no,
no, 2 pennies.
I earned 17 cents
What?
in interest last year. And just for the record, it's not like an empty account. Like it's not, I'm not a wealthy person, but there's like a little money. And
you need to ask for more decimal places. Do we round up here or we round down here? I need to know.
So, for me, the experience is with something like Coinbase, which is obviously a centralized company. It's effectively a bank. I am keeping some money in there. I'm maintaining an account. There is like someone else in charge of the security. They can be breached. They can be exploited. They hopefully pay lots of, although according to Brian, half the platform is vibe coded. So that's concerning.
Yeah, it is concerning.
And his goal is to increase that percentage. Also interesting flex, but go off, Brian. Or I could have, that same, let's stick with stable coins. I could have that same asset in a hot wallet, which is more decentralized, obviously still has some pieces it's possible to be exploited. I'm not necessarily the only person involved with security there. Lots of pieces, but I have more ownership of it. I have more, withdrawal rights. It's maybe potentially faster. I don't have someone who's like sitting there, hawk watching my account, making sure that I don't do, X, Y, and Z. Do not tell the IRS about my 17 cents.
Don't do it. Don't be that guy. Don't be a narc. He needs that.
I need that 17 cents. So for me, like that's really the crux of it. Like when I think DeFi, to me, it's just like, okay, I'm now putting things in my wallet and I'm like going out into the proverbial ecosystem of all of crypto, and I am experimenting. I'm taking a little bit more risk. I'm taking a little bit more ownership and responsibility of my stuff, and it's more me, and it feels a little bit more, I have a lot more fun doing it, even if some of the experiences still have room to improve.
And just a lot of quick bit before you answer, James, from the audience, because we do want your perspective on this too. We want to treat this, like a focus group with everyone, because I think it'll help James. One of the answers in the audience is some of the removal of the trust question. For example, our friend Ace said AMMs are a DeFi staple, automated market makers that match buyers and sellers with liquidity pools. So for context, as you answer.
Yeah, I mean, it's super interesting. I think it's in line with like where we're moving as a society, and like our expectations is we have a lot more. I don't know if you know this term. I use a lot of like prosumerism, right? Apple helped earn a lot of money off people thinking they were prosumers, and like, you need this MacBook that's tricked out for your Word document here.
Yeah, sure.
but we see this rise of like technology leads to more ownership in a way, and more like, hey, I can configure stuff. So look at how financial industry went through of like used to only like go through brokers and like they manage all your money. Okay, now you had these low cost index funds. They made these financial products, these assets that became easier for you to like directly invest. Okay, now like getting access to, for a U.S. person, to U.S. equities is not hard. Like that's not really a problem we need to solve. It's super easy. Like there are consumer apps, Robinhood, all the major brokerages have apps that make it super easy for you to get on your phone and like buy a stock if you want to. You see things like robo-advisor, like a Wealthfront. Wealthfront's doing great work of like, hey, like I know enough. I went to college. I know enough about, thank you for the The logo is great. We'll talk about the logo at some point. Love the carrot. I get a lot of compliments on this from people who have never heard of crypto. Gives me a lot of confidence that if we want to be a consumer brand in the real world, that like we've got some good stuff.
Yeah.
No problem. I didn't mean to derail you by letting it come up on the screen.
No, it's fine. But we see this trend of like, hey, I want to take a little more control of my future. And now that technology enables me to get access to these markets and have access to these configuration tools, and people have abstracted away a lot of complexity, good or bad. There's some like good there, there's some bad there. I now feel like I can take more control over that. So like robo advisors, I can buy index funds directly and pay really low fees, for those. Gosh, if anyone in the audience is paying a broker or a money manager to buy index funds for you, or mutual funds, even worse, shame. Stop. Get out of there. Like you're doing it wrong. There's a better way. And so I think that as we continue to see how do we equip people to take control of their financial future and say, hey, there's more you can do, and not just. Okay, here's a hot take. Our product's not built for crypto Twitter. It's honestly not built for like the middle section of like crypto adopters. We're really built for like early like newbies first coming in. DeFi's a little scary, and for people who are like super advanced, who are like, I realize that this is a headache, and earning a couple basis points different, and the risk I take on, is not worth it. And if someone can automate and optimize for me, I'm totally in, and I can just pass me hold it and go about my day and not worry about it. Awesome. The people in the middle that I've found, because I work with these people every day, is managing their DeFi as a form of entertainment for them.
That's really interesting observation.
It's like a hobby.
It's a hobby.
Yeah.
Like, okay, you made some money. You made some money. You're in the know enough to know what an AMM is, or like, oh, this strategy, if I can LP, I can leverage LP. Oh man, what's a CLLMM? What's a version 2 of a CLLMM? You can go down this rabbit hole, and like it's fun. You're learning, and it feels like you're in control of your financial future, and you're playing with money. So like you're getting a return. This is great. And when you lose money, it's an educational experience. But I found for these people, like they almost don't want simple products because it's a form of entertainment for them. To the more complex, the more configuration, the more like I'm on the edge, I'm near the metal, whatever. And it's a really interesting phenomenon where when we're building stuff, you got to decide like who you're really building for, like who's the person. And I'll say most crypto builders I know, I fall in this trap of building for the crypto Twitter because I want the flowers, I want the acknowledgement, I want like that seems where the bulk of the money is. You think that's the bulk of the money. And sometimes it's a huge miss because you don't realize that they are journeymen. There is mercenary capital out there, and it's the form of entertainment. And so making it easy is actually counterintuitive sometimes. Sorry, totally off topic on
no,
that one.
It's very on topic. It can be a walled garden, and that's a very different product for a very different kind of user.
And then when you build for them, it makes it really hard to onboard other people to use it. Because like, wait, hold on. So to log into this site, I basically give them my bank account.
Right.
What?
Right.
That's a wild concept. Wild. Like in some ways, I hope we, make a more consumer friendly site where it's not a wallet connect. It's go to your account. It's there and be able to teach people proper wallet hygiene and safety. Alex, you mentioned of throw things in a hot wallet. What's a great thing about Carrot is it's a token, and so like it moves into your cold wallet really, really easily. People love it for that reason because they say, hey, I minted the Carrot and I throw it to my ledger, throw it to my cold wallet. It's safe. It continues to accrue value. I can check on the balance anytime through any viewer because it's just a token, and it's safe and secure. It's good to go. It's another like superpower of like tokens can transact and cross a lot of different platform borders and let people choose to view the information where they want to view it, where they're most comfortable, in the UX that they're comfortable with. Phantom, great. Backpack, great. MetaMask, not great. But you can use like whatever you want to interact with our platform and not be forced to log into our site only to like do stuff and check on your balance and see what's going on.
Yeah. I think that's a great point to take us to use DefiCarrot. Will, did you have a question? I heard you say, sounded like you're about to start one.
Nope. No.
If you want to play along at home, then the URL you're going to use is use.deficarrot.com. And somebody assist me with what I'm going to do is like a little screen share. And then, James, I'm just going to invite you to kind of tell me how to drive here. I see, for folks in podcast land, there is a select wallet button in the top right corner, and you've got the option to choose Meta.
Oh, no, give it a hard refresh. I know what this is. This happens with Phantom, where like the cookie says that your wallet's connected, and then it doesn't give the option.
Oh, well, it still hates me. Hang on, let's try this. I'll share another screen, and then we'll make it work this way. Haha! Don't tell me there's not a workaround. And I also, while I'm pulling this up, have to highlight these comments for you. Hublai Khan is a comedian in the comments who, in response to what makes it decentralized finance, said, one day, all Fi will be D. And also, perhaps we will start calling banks old Fi.
I do think on that comment though, like when Alex said, it makes me sad that the term like DeFi will go away. And I was like, yeah, I think there will be a certain amount lost, because when everything becomes just finance or Fi or whatever it becomes, there's going to be a little bit of a difference of people understanding that there is something different. Like they'll use lending on Coinbase and be like, oh, I'm using DeFi, or they'll, I don't know, take a loan or whatever through BlackRock through some kind of BUIDL fund that I don't know, something, right? And they'll be like, oh, I'm using DeFi. But to them, it'll just be like, oh, this is a new solution in finance. And if the word DeFi goes away, the word DeFi, having that is actually really nice, because it triggers in their brain that this is something different and new for them to like research and educate themselves on, and be like, oh, okay, there's this whole decentralized and censorship resistance, and there's no borders and no one can freeze it, right? Just having the word does trigger in your brain, this is something new and there's something to learn here. So that would be my one counterpoint, is that in all of the different jargon that's swimming around in crypto that, should be reduced or, fixed or made to be a little bit more understandable, relatable, etc. The word decentralized is actually starting to pop up in more and more places outside of the Web3 space, outside of crypto.
Anarchists have been using it for a long time. Thank you very much.
Yeah, I know, but I'm saying it's becoming more like commonplace and colloquial all over the place, not just in tiny niche circles like anarchy and crypto. So I mean, like all over TikTok, for example, right? Like as concerns about the new iteration of the app and yada yada, whatever comes through, and as we saw, more with concerns about who has the data, who has whatever, a lot more people who have never been in that space, or who I've seen post things that are specifically anti-crypto, are more interested in decentralized social media options, for example, other ATP stuff like that. So I wonder if it might just become more acceptable to talk about the decentralized version or the more decentralized version of stuff, including.
Okay, but here's the question: should you pay a premium for DeFi, or should you use it because it's faster and cheaper?
I would agree with that. I'd sort of add that, like, is it really DeFi, or is the word being co-opted? Because Ace said in the comments, I'm using FTX. It's DeFi,
Wait, Jason, when you say like, would you pay a premium for DeFi, meaning would you pay more to use DeFi? Is that the question?
Typically, we look and say, hey, when I'm getting user benefits that I want, it's decentralized, it's permissionless, I have ownership. These are like things that I'm getting that I don't get from traditional finance. That sounds like a premium. So would you pay more for the premium, the features that you want? Or is it being used because it is faster, cheaper, more transparent, and so it's a business decision that we don't use crypto because it's novel. We use crypto because it is a better way to do things.
Yeah, fortunately, thanks to blockchain decentralization, we cut out the middlemen. So thankfully it's cheaper and better and faster. But would I pay a premium for it?
I honestly think it depends like where the premium goes, because I will happily pay more to support things I care about and I want to see like thrive and grow.
Yeah, I will for things that I have like a brand emotional connection to. If I don't have the emotional connection to it, I won't. Which is why I'm like struggling of being like, would I pay the premium or would I just stay with what I was doing? I would have to, the only way I would get over that personally myself is I'd have to educate myself to understand what the true benefits were and then do a cost analysis in my head and be like, oh yeah, no, this is totally worth it. But if there was a premium initially out the gate, my initial reaction would be no. My initial knee-jerk reaction would be no, and I'd have to have the education to get above that. That would be my reaction if DeFi was cost a premium.
I would do it if I was early if it cost a premium. I don't know. I might, if it was really better and more convenient, I would do it. But just because of how I'm used to doing things, I feel like I would look for a newer product that gave me, I'm like a yield chaser. You know, I'm not that DeFi user you describe who's into weird stuff, but I don't know. I just would be like, oh, you become Coinbase. You have so many users that you can't give me 5% anymore. You got to bump it down to 3 to 2 to you become a bank or something. Maybe.
I would. I just wanted to highlight Joe's comment because I think it's worth pointing out, especially as we talk about blurring the line between CeFi and DeFi. So she says risks exist for DeFi that already inserts a premium. And
when people ask me how risky is it, I say, well, how much better return are you getting? It's a pretty clear indicator of the risk premium.
Yeah.
Yep.
I think too, though, that we do look at this risk because it's a different kind of risk. Like the risk with DeFi traditionally would be either I make a mistake personally with my assets as I am taking more responsibility, I'm more in charge, or on the protocol side, of course, there exists the risk that like someone builds a shoddy product, but that's not unique to crypto, or of course the risk of holding volatile assets that, you know, prices can shift and swing for, you know, little to no reason, crazy amounts, all that good stuff. I do think it's worth pointing out too, though, that significant risk is still present with centralized finance. A lot more money gets stolen in that world than it does in DeFi, and you have a lot less. That kind of takes me back to the ownership and control thing, right? Like a lot more of the responsibility for things not getting stolen rests outside of you. Like you can be unbelievably savvy online with your OPSEC and your personal information, all that kind of stuff, and some dipshit at a company can just like get something leaked, and all of a sudden all of our social security numbers are being sold all over the world.
I mean, that was my red pill moment. You know, I had a self-directed 401k, and it's been through Fidelity, and every year I had to mail a check. It was the only way for me to fund the account. That's wild.
That's incredible.
Yeah, that's nuts.
I wrote a pretty sizable check, let's say in the multi 6-figure range, and I sent the check in, and a couple days go by, nothing. Check gets cashed, not my account. Freak out. Call the bank, you know, finally get elevated to the right people, the manager. Their automated system got the check number wrong, deposited into a different account. What if I had no recourse? Like what? Excuse me? And like it was a significant amount of money. And at that point you're like, oh, okay. Yeah, things do go wrong. And for Americans, it's tough to understand the financial system working against you. And a lot of other people get this a lot easier because they've seen their banks turn off the ATMs. They've seen their accounts frozen. They've seen these things happen to good people, like just without recourse, just a mix up, you know, something. And that freaked me out enough to be like, all right, this is a big deal.
I mean, that makes me think of the example of my mom. They sold a house recently, and the brokers messed up, and they forgot to collect the money from the buyer, and they just handed over the keys, signed the house to him, and it was his house, and he never paid a penny for anything. And luckily, you know, he was stand up enough person to just be like, oh yeah, no, here you go.
I'm
trying to do the thing, but like
wow.
If he had chosen to be a pain about it, like it was legally his, and it was all completely said and done, and they just gave it away because they forgot to collect the payment.
Oh no, the thing we were trying to get. Oh shit.
Yeah,
I feel like I forgot something, guys. Hang on. Wait.
Details.
Yeah.
Dude. Okay. Shout out to James for saying in the private chat, you want me to drive the screen share, bro? And I just wanted to show for the record that I had it. The conversation was just going great. And so I wasn't going to interrupt it by flashing something huge on the screen and bopping it up. And I will take this opportunity while he's pulling it up to welcome everybody who's here. This is the Rise Up Morning Show. We're live Monday through Thursday to answer your crypto questions. And today we are continuing a conversation on how to DeFi. Whether you're curious or concerned about cryptocurrency, or you're a full-time power user, we want to help you get in touch with the products and services that are live today, right now. And your feedback matters. So when James directs these questions at us, when we're back and forthing with each other, we want to hear from you. We're watching the comments on every platform. And if you're listening in the future on a podcast, hello. We hope your candles are green. You can leave your comments in our totally free educational community. You can find the link at rumshq.com. We got everything except you. We'd love to see you there. James, take us to DefiCarrot.
Yeah.
What are we looking at here? And this is use.deficarrot.com for
That's
the
right.
along folks, right?
That's right. In fact, there's a new interface I launched, last week for hopefully good reasons. I hope everyone likes it. One of the things that we really dealt with, the benefits of Carrot is it's a token. And so the interface is so simple that it feels just like a swap most often. And this was some feedback and comments we have like, okay, yeah, the swap is great, but the swap can make me feel pretty uncomfortable because I don't know what this token is. Am I swapping for a meme coin? What's the deal? And we try to show like, hey, here's the price history. Here's the all-time price history. Here's the last 3 months. You can see how this thing moves up and to the right.
Looks like a honeypot pump.
It does
look like a honeypot pump. Yeah.
Yeah. Except, it's got $32 million in it, and continues to go up.
And you can withdraw it.
Yeah, and you can withdraw it. That's a key factor. And so we recently moved to where this can now feel like a deposit. Like you might feel a little more comfortable saying, hey, like I want to deposit $10. It's just deposit. You are getting Carrot token back. We kind of explained that. And then the same like on the withdrawal side where you've got a balance and you just like want to withdraw instead of like typing in how many Carrot you want to redeem. And so this is helpful, we find, for like newer users who like the idea of DeFi or like the idea of like, okay, this makes sense. I'm depositing to get yield. Okay, just like I put it in a savings account or a CD or my money market account or something. I'm depositing it. And then we want to like work to continue to educate on why the token matters, why the token is better. There's tax efficiency. You can transfer it, you can split it, you can now use it as collateral. It's your asset that continues to like earn while you hold it. And it really is that simple. It's sometimes I feel silly when people want to, okay, how do I use this? How do I use this? And like, you just, deposit and swap for the token.
James, can you very quickly, before you like get into the nitty gritty of the swap, talk a little about how you chose to integrate different wallets? You mentioned, I think it was, is it the BitLink wallet? I didn't have it up. That creates a wallet with your Google account, for example. And I see you've got a bunch of the regular characters there: Phantom, Brave, MetaMask.
Yeah. Most builders, what we're doing is we're using a wallet connect that looking for your available plugin wallets that you have access to through your browser when it's looking for it. So depending on how you access it, this list is different. So like if you don't have a Glow wallet, which most people don't, it's not going to show that option. And so kind of giving you what you expect to see. TipLink is a really cool piece of tech where they essentially allow you to log in with your Google account, and they create a wallet for you. And then you can use that wallet anywhere. So when I have friends who I don't want to really explain how to get a wallet and how to fund and how to do stuff, TipLink can work really well for them.
Beautiful. Thank you. Please continue.
Yeah. And so we do a lot of things to kind of show people, hey, here's the performance, XIR, that's a fun one, kind of like showing them return. And we're really proud, we launched the product over a year ago, been working on it for a little longer than that too. And in our first year, we returned 10.6% APY, which is killer. Like, this is great.
Wow.
That's awesome. It feels really good to put the annual in APY. Because one of my most frustrating experiences in crypto is how manipulated the APY figure is. If you don't know, people are taking, hour data, 4-hour data, 1-day data, extrapolating that to an annualized figure is honestly almost irresponsible. To try to do that. And it's why we're always inundated with the how do we show our yield in the best way for people to like compare it in an apples to apples way. It's almost impossible because you're going to see, like on Pendle, I can get 40%. On Aave, okay, I'm getting like 3.5%, 5%, something like that. Okay, these more technical things like this whole range is really hard to compare risk profiles for stuff. And it's another benefit we see with the token. So our yields are a little down today. But one of the things we really pride ourselves on is like our data transparency of showing, hey, here's where all the money is. So if you want to look and see, here is the distribution of all the money and the rates that it's earning in all these places. And so that is like the promise we're making to the user, is saying, hey, we're not taking any directional risk. We're not taking any leverage. We are earning yield from over collateralized loans at blue chip, venues. And that yield gets aggregated back into the token. So it auto compounds for you. And the token price will continue just to go up. And unlike the Marinade solution, where it's an LST that still has perfect directional risk, for us, it feels really good. When you earn an APY, you expect that if you did the math, your starting balance and your ending balance would like be in line with that number. Like that should add up. And it's why we calculate our APYs based on token appreciation. So we just take the starting price of the token and the ending price of the token, calculate what the APY is over that period, because that's the real APY you experienced. We could take all the APYs and the allocations and average them and do some stuff. It just wouldn't be a perfect figure, because APY is a backward-looking metric to try to understand future compounding returns that you're going to get if things continue in that same direction.
Can I stop you right there just to summarize and answer a couple of questions really explicitly? You have said here, in response to someone like Ethicalish, who's asking about, if I move my Carrot tokens to cold storage and then I cash it in, how do I get the interest? Or if I use two different hot wallets and then move it to the same cold wallet, the yield in this case is tied to the token. I just want to be really explicit. It is a reflection of this underlying basket of assets that James just showed us, that may or may not change depending on what they do in the background, but that they'll report to you here, and that presumably you could check on chain. You don't just have to take it on faith.
Oh, you can. Oh, yeah.
Use the docs to click into it. You could find out how to do
view
that.
The program, view the token on chain. We want you, like, everything's super transparent, verifiable. It's owned by on-chain accounts, owned by an on-chain program. We can't steal your money. Like, there's no way for me to withdraw from this thing. The only way you're getting the money out is burning the token. And that token is categorically what we call like a liquid receipt token. Maybe more technical. You don't really need to know that. But the idea, hopefully, is highlighted here.
Is helpful.
Yeah, receipt is helpful. The idea, hopefully, can be shown here of hey, my net deposits are $9,995. My total value is now $10,673 at this moment. So this begins to show how the token has appreciated. So like, here's what I've deposited. Here's what I've earned over time. My units of Carrot didn't change. So it's like I own the same number of units of it, but now when I come back and exchange it for the stable coins that I want, I'm getting more than I put in is the idea. So whether you store it in a cold wallet, you split it up into 100 wallets and they bring it all back together, it does not matter whatsoever. The value is accruing to the token price, which, for those who are thinking about this, like, this is an awesome tax strategy, because you are now, instead of paying normal income on interest earned, which would be the case if you deposit in the DeFi protocol, if you're doing everything by the book here, you now have an appreciating asset. This is wonderful news, right? Because now you don't have to pay, if you hold it for a year, you're not paying, short-term capital gains tax, you're paying long-term capital gains tax. And even better is you now also have the ability to take a loan against it. So never sell it, never trigger the realization event, get access to your liquidity anytime, because now your bank, this is wild, your bank account, your savings account now just became an asset that you can use as collateral to take loans against, to get access to your liquidity without selling it. Lots of really, really cool stuff that isn't possible in traditional finance. This is an edge where we say, hey, what we built here is better. You have more power and you can do things you could not do with your normal bank account because it is a token.
Yep. All right, fine. You won me over. You won me over. I'm moving some stable coins.
Move it over.
Off of I'm probably take half off of Morpho and move over here on Carrot, because that tax advantage piece got me in and of itself. And then the ability to turn a bank account into an asset that I can take loans against, and also reduce the amount I pay in taxes. That shit's awesome.
Now
it never goes down.
The question is, when do we get Carrot hats?
Yeah, when do we get Carrot hats?
I actually just got a new batch of them. We make great merch. I even have a needlepoint belt. We got great stuff. Oh yeah.
Yeah.
Gotta go hard there. Yeah.
And I do want to, because I know a few people, whenever they see and hear a token, me especially, I'll just be like, okay, so like it goes up and down because of supply and demand of markets and speculative trading, all that kind of stuff. Obviously, that is not the case here.
Yeah.
But I just wanted to restate to everybody, this is a token, but it does not go up and to the right because people are only buying it. It goes up and to the right because it is earning yield. That yield then increases the price of the token. It is not going up because of speculative traders, right? It is not going up because of trading action.
Yeah, there's no fixed supply, which is great. Usually they mark this as a flag, a warning, right? Because it's like they can mint more tokens, but it's a critical piece of the architecture. Because no matter what size, and this is a cool feature. Our friend, the white whale, put this to the test of no matter how large you deposit or how much you withdraw, there's no slippage. Because we're doing a conversion. So there's a NAV price. A NAV price means net asset value. And that's just the ratio of the assets under management and the token supply. So just divide that and you'll get like what the price per token is. And so at that ratio, we can mint or redeem, to infinity, or not redeem to infinity, but like to the supply. So it doesn't matter if you deposit $2 million at once or $10 at once. There is no slippage because it's just a ratio. So we have to maintain like the pre-balance and the post-balance shouldn't affect the NAV, the price whatsoever, which is really great. This is awesome. And for our large holders, and this isn't everybody, but for large holders, Carrot represents your best way to engage and deploy a large amount of stablecoins to earn yield into the Solana DeFi ecosystem, because we represent the whole ecosystem, right? Like our capacity is larger than any single venue. So our main spots of Camino and Drift and MarginFi, Jupiter now are
main spots, meaning these are like the underlying kinds of things.
These are like the banks. These are like where the markets are, the venues are, where we're earning yield, where people are depositing collateral, they're taking loans, paying interest, and we're supplying the dollars to like earn interest on that activity.
And just to stop you one more time to make it clear for folks who remember Marinade. Marinade has a token like this that accrues value representing the staked SOL yield. So that is one kind of underlying yield generating thing, staking, securing the network with staked tokens. This is a different kind of underlying yield that reflects a much broader application of different DeFi possibilities across Solana.
Right. That's right. And so for the white whale, he looks at some venues and say, hey, if I deposited $5 million in here, I'm going to kill the rate. We're going to what we call compress the rate, because these rates are based on an interest rate curve that says at a utilization of how much money is in there and how much is borrowed, the interest rate is this. And as more gets borrowed, the interest rate goes up to attract more dollars to supply, or to people to pay back those loans. And the benefit that we have is our capacity is the network. And so if someone wanted to deploy $500 million, they couldn't do it in one clip, in one spot. We like represent the best way for you to do it and still maintain the highest, overall rate without compression.
So that's a question that we have here from our friend Bearded, who says, so your yield started at 10%. Now it's down a little at 8.95. Does this yield, is it going to change in the future? How are you going to scale and bring more money in and, move out as the Solana DeFi ecosystem saturates? In that context, thoughts?
Yeah, great questions. So one, in a way, we're not quite responsible for the yield, right? We're aggregating and pulling it from the best you can be getting. And as we continue to grow, we look at, how do we increase our capacity, and not just rate maximization, but capacity, because, we have this effect, we normalize rates across all markets. So it used to be that like you'd have like 25% here and 8% here and be like, oh, I'm going to rush to move my money over. But like when you do that, essentially you bring that rate down and you raise this rate up. So over time, we normalize rate. This is really good for DeFi. This makes things, easy to track, comfortable. I'm not getting these spikes either way, which is nice. The capacity problem of how do we guarantee that rate is there's a few things going on. So one, the aggregated rate, we're going to do better than a single venue, because we're getting better rates than you're going to get from like one spot. So I can like mathematically show you how that works, and that's possible. Two, we launched our own lending market. So as an aggregator, you're like downstream of post-profit, post-reserve rate from the other lending venues. And we're like, there's no business here. And so we launched our own lending market called Carrot Lend, and we built our own suite of one-click, automated, optimized products in Boost. So Boost is our like product that's built on top of our own lending markets. And what's nice is we run just-in-time inventory for those that allows us to pay higher rates to our suppliers and lower rates to our borrowers for a good experience for everybody. And that leads to us having, one, more capacity, and two, generally like higher rates than you might get from, other main market, lending venues. The other thing we see is, we're dollar denominated. So we're an index of stablecoins. So we have USDC, USDT, and PYUSD in there. And this means that we can also get some fluctuation on the relative strength and weakness of those coins as they kind of move. And so our rates are always above average, and always like very, very competitive to what you're going to get anywhere else.
So I used to do more really deep dive altcoin reviews, and I need to get back into them. And the reason why I bring this up is because the first question I always try to get every single person to start with, which is this thing useful? Does it solve a problem? And is that problem just a crypto problem, or is that problem a real world problem? And that's the question everybody should be asking themselves to see if there's anything if anything is worth anything. Does it solve a problem? Is it a real world problem, or is it just specific in the industry? This solves a really big problem that hasn't been talked about at all, essentially, in the industry. Something I haven't even really talked about much at all, because I didn't even really think about it until hearing you talk just now. DeFi has had a really big problem attracting and retaining long-term investors, because that APY is so muffed with, right? It's so manipulated, because it's like, ooh, we got this return one day. This is what the APY will be if it stays here. APY, it's so hard to keep it constant. And if you are that middle group of users of DeFi, you enjoy going, okay, the best yield's here. Now I'm going to take it over here, and the best yield's here. The best yield's here. But if you're a long-term investor, which most people are, they want to just like, hey, money's here, it's investing, cool, I'm going to go work my job, I take a certain amount of my paycheck, I put it over here, and it just keeps building. That is most people. And DeFi has been a truly awful and horrendous place for those people, because they're going to be turned away, being like, okay, cool, I could get 20% here and 10% here and 8% here, but I have to move and do all these jumps. I don't have time for that. I'm not that investor, and I'm likely to make a mistake. And if you make a mistake in crypto, poof, money's gone. This is a place where that person can finally be like, cool, I can put something here and I'm going to earn above average returns. Awesome, great. You are positioning a product for the largest group of investors in the world who are turned away from DeFi since 2020, because it hasn't been a conducive or friendly place for them to invest the way they want to. And that is a problem that I didn't even realize was a problem, because I'm that middle group of DeFi users. I do this and that. I'm like, this is fun. I'm having a great time. I get to learn all this kind of stuff. But it's a huge problem. And that is an amazing opportunity for you, which you have definitely already clearly realized. Otherwise, you wouldn't have started this business.
Yeah. And frankly, we want to, for you in the middle ground, we want to be the thing that you want to share to people, that you're like comfortable and to put your name against, to say, oh, like, I know that I'm not putting you in a meme coin that is going to lose you money and then I feel bad. It's like, yeah, this thing's not going down. This is great. Just buy this, hold this, don't do anything. It's in your wallet. They feel everyone who's new to this feels most comfortable when it's in their wallet. They can see it. They can check on it. That makes sense to them. It's my balance. I don't connect my wallet to something else to see it. So shout out. I appreciate that. It's great.
I want to ask you a question though about that, because I do think, especially for a crypto native company, because a lot of the people who will hear about you first are not those people who just want a bank account, who are familiar with crypto. I'm curious about how you're generating revenue and how you plan to get over what I imagine is a big hurdle of like, you're gaining traction, people love your product, and someone sees it and says, you know what, we can raise $50 million to do this slightly different, slightly better. And because we're newer, we can infuse it with a better yield. And they're going to take all of your primary users because they're doing the same product. You're probably fighting right now for crypto Twitter adoption and DeFi power users. And somebody like me, it would be easy for me to be plugged in enough to know, oh, another DeFi Apple just launched and their interest rate is slightly higher because they're doing the exact same thing and they got a fresh round of funding. I'll move over there for 3% more. And then when DeFi Broccoli launches, I'll move over there for, you know, a little more yield. And then I'll move.
But you don't know, we're Procter and Gamble. They're all us. Under the
Yeah.
A smart
no,
business strategy.
That's not the answer.
So
but you're absolutely right.
Help me understand, like, how do you guys make your money? And then what's the vision? You know, obviously the vision to scale is to come talk to people like this, but.
This is great. Yeah. One, you should always ask this question: where's the yield come from, and how do you make money? You know, this shows you where incentives are, and how we're going to be working as we go forward, and why you can trust us. Like, you should know those questions, get those answers. And you know, I'm gonna pick on one thing William also highlighted that I think should be said is we care a lot about what we call real yield. You know, this is like dollar in, dollar out, real yield. Because so often too, people got burned by high APY that was like a 2% base real yield, and then they got this extra token that they never heard of that like threw it up to 13%. Like, that's not real yield. Like, if I have to like sell an emission token or a bonus token or a incentive token in order to like realize that yield, it's too much work. I'm gonna forget to do it. There's no guarantee what the value is when it comes time to actually sell it, and it doesn't represent real yield, and that's a terrible experience. Like that, like. More people I know in DeFi summer thought they made a ton of money because they're looping and doing all these things, and they actually lost money because they were being told what their numbers were without them checking and verifying it. It's a terrible experience. And so we care a lot about like that real yield. This is like actual dollar value you can like get in and get out. But what you said, like, product positioning is really hard. We're in this transition moment, I'd say, right now. And some feedback I'd love to get is you know, what other products are really interesting? Because in a way, when we first launched the business, CRT is really a product of a Carrot protocol. And CRT is our flagship product. And we knew that, you know, we wanted to be as one token for as long as possible. This is what we found as a bad UX in crypto is because it's decentralized, we tend to be also decentralize the discovery for people of, we're just gonna give you a menu of options. We're a platform, any token get listed here, any strategy get listed here. And when you come to these sites, you're like, why is there 4 markets for the same thing? Like, why do I care about JLP, USDC, PYUSD, USDT, you know, whatever? Like, that's built for a more advanced user, straight up. You know, you go to Yearn, there's 40 options that seem like they're exact same thing. Like, what makes them different? What's the methodology difference? Like, that's a bad experience. So we want to stay one product as long as possible. And the reality is, Carrot Protocol, what we actually do is we issue tokenized structured financial products. CRT just happens to be like level 1 for like what that structured product is, which is the yield aggregator. So think of it as like an internet bond or a money market account. That's like really what that is, but we're not limited by that. You know, we can tokenize all sorts of different strategies. And part of our goal and where we're going now is we will start to split our product into like main consumer friendly tokenized DeFi, a lot of different types of strategies. So like a 2x leverage strategy on Sol, a delta neutral hedge JLP, you know, you might not even know what that is. A turbo perp where we optimize all the LP tokens for you and we loop it for a little bit of leverage, but we guarantee no liquidation, and it's just the same token that you own. And because we've spent over a year optimizing and hardening and scaling the infra side of this, we feel really confident of launching more tokens because they use the same infra, because it's Carrot protocol that powers the CRT token that now is going to power a lot of other tokens that make DeFi easy and accessible in the same form factor of a token that's easy to understand, to acquire, to hold, to tell your friends about, that, you know, hopefully makes the experience better for everybody. And so it's optimized, automatically managed, one-click products that people can, you know, get into without needing to know all the bells and whistles, the configurations underneath. Now, we're also going to we have Carrot Pro. And Carrot Pro is like what the Boost product is right now, where it's the same kind of suite of products. You can do the same things, but you get control over your configuration, so you can tailor your risk profile. You know, you want to take 4x leverage versus 2x leverage or 8x leverage on something? Great, you can do that. Individual positions that you manage and control. And the way we make money is what I touched on earlier, is we are vertically integrated. And so like our goal is we are continuing to push you know, TVL and demand through our own borrow lend product. And so we have a covenant with, you know, we've got 30+ million in TVL of stable coins that are looking to deploy. And any DeFi protocol, when you first launch, you know, one of the hardest problems is your cold start problem. You know, who's the first dollar in for supply side capital? And this is why we use incentive tokens. This is this is how crypto works. It's new capital formation of internet capital markets. Of I'm going to give you an extra incentive equity in the future cash flow of the business in some way. Probably shouldn't say that out loud. In order to like cover your risk that you're taking. And I would argue you're not getting paid enough. First capital on the supply side that's super risky. And if you're not getting a huge return, like that's more risk than you probably should be taking on that you're getting. But for us, when we started our lending market, we already had tens of millions of dollars ready to go that we had a covenant with our users to find the best yield for them. And so we allocate for the best yields that are in those markets. And we still aggregate, but we are now like in that mix. And so we make money on the two primary ways that lending markets make money. Origination fees when we originate loans, and what we call the reserve rate, the spread. It's not the perfect spread. If we're charging 6% and paying 4%, it's not that we're making 2%. You have to cover the unused capital, right? So if we're at an 80% utilization rate, there's 20% that's not earning. So only 80% of your money is earning the dollars that have to pay 100%. We'd like to say 100% of your supply gets paid. So 100% of the dollars that are in the pool that's getting the interest rate has to get that interest rate, no matter how many dollars are actually earning in order to like cover and pay that. And so those are the two primary ways that we make money. And it's where you expect to pay a fee. Taking a fee in stablecoins is really, really dicey. Like you feel 5 basis points. We have a 5 basis point redemption fee, and it's not really revenue. That's not revenue for us. That's there to protect the protocol because you can have a stablecoin swap arbitrage inherently, and so that's like there to protect the protocol and everyone in it. But even that tiny fee, like 5 basis points, you feel that. It takes maybe 8 hours to like recover and get over that point, depending on what the yield is. Versus wallets these days charge like a 1% swap fee on volatile assets, but the user doesn't feel it, right? Because when the price moves against you, it's the token's fault, not the fact that you paid a bad price or paid 1% fee on that. And so for us, it became really, really clear that we weren't going to be able to charge a performance fee on stablecoin aggregation. The margins are tiny. Your rate is your advertisement, and so killing your rate is bad for you. It's bad for business. And so by being vertically integrated to our own lending markets, that allows us to drive significant revenue, build a better product. Vertical integration lets us have better UX. Like Alex, you said this earlier. What leads to bad UX is bad information architecture underneath. You have a desire to make a great user experience, but if the fundamental building blocks you have to work with aren't there, you can't do it. If there has to be a wallet connect, you have to sign a transaction. I can't get over these base facts. Therefore, I maybe can't give you the experience that I want to give you because the reality of the information architecture underneath doesn't allow me to do that. And so by being vertically integrated, we can smooth some of those edges. We can do things that help protect the user and say, hey, we're going to manage this and not just let the invisible hand do it. We're going to be able to deliver a better experience because of that vertical integration. And hopefully for us over time, we can solve the ever-present discoverability and trust issue of, as we add more methodology, like DeFi methodologies, and I'm interested to hear what people think are the DeFi methodologies like LP or indexes or funding rate farming. I mean, there's all sorts of these things. And say, if you're already a trusted user of Carrot because you came through for our yield aggregator product or you like our other stuff, you're more likely to use our version of the other stuff. And creating this like kind of trust environment, we say, man, because the data is all wrapped up nicely in a portfolio view and I can track stuff really easily, I just don't want to use a different platform. Like the new stuff might be cool, but DefiCarrot gives me a great version. That's the knock on Apple every time of Apple releases the feature and they're like, oh, it's groundbreaking. It's like Android's had it for years. But Apple gets a lot of praise for it because they made it a good experience because it fit in their vertical integration of the software and the hardware and everything. And I think that's really our goal long term of how do we become the next multi-billion-dollar protocol? Well, it's because we focus on the users. Our experience is great. We deliver a level of transparency and trust that we hope leads to more product discovery and more product adoption as we have different risk profile products. And the revenue model is really straightforward and simple, where we make money on originating fees for loans and taking a spread on interest rates, which is normal and expected. Doesn't feel like I'm paying an extra fee for it. You're not paying extra for the DeFi. You are getting compensated for a great experience, because of the decentralized nature of it.
Yep. There's one thing I would say that you are missing from that list.
Oh, great. Bring it.
Which is getting the messaging out there. You build something great, like in the crypto space, you build something great and it has advantages, like obviously you got on the white whales radar screen. Through that, you got on our radar screen. Word of mouth goes and catches. And in the DeFi space, that, beginner group and the people who've been around for a while will hopefully naturally gravitate towards using your product, right? But as I mentioned before, the biggest target audience for you, the biggest money-making opportunity for you is getting adoption amongst people who are long-term investors who have been turned away from using DeFi because of how annoying it is to have to hop around a bunch of places.
Yeah.
That is your biggest pile of money that you can get. And so you need to message towards those people. Maybe not now. It would be good to do as quickly as possible, because you do have that natural crypto Web3 incubator, if you will, where if you build something great, some people do come and money does come and you will build, I think. But your biggest opportunity is that other group of people. So do you have like a communication, a messaging, a marketing strategy in place to engage those folks? And I'm curious what it is. If not, definitely something you need to kind of build a strategy around, because that is your biggest money-making opportunity, in my opinion.
Yeah, I'm with you there. It's an interesting audience to try to reach, and the best tech doesn't always win, right? That's always been true. It's the best tech that is communicated well and reaches the right audience, the right time, about the right thing. And I think that's a big bridge that a lot of crypto is trying to bridge. Of hey, we talk about like, are the normies coming? Are the people coming to buy our bags, or like, is this the next wave of real adoption? And it's a mixed bag. That's my hope of. I saw the benefits I got with DeFi, and I wanted my parents to have it as well. And doing all the things that I was comfortable doing, they weren't going to do. And so again, this was the vehicle that I feel most comfortable sharing with anybody to use, because I'm really confident in the product. And yeah, I got to get over some hurdles of download a wallet. Here's how you fund it. Okay, now you're on the token. What is a token? And we're trying to abstract some of that away, where for the right audience, talking about token comes with a lot of positive connotations. Okay, token is transferable, it's liquid, it's divisible, it's fungible. I can take collateral, I can do these things. This is great. For most people, you just want to call it an asset. You just want to call it, like me relating it to a bond or to a money market account makes a lot of sense for them. It's why now it's not swapping for a token, it's depositing into it, and trying to find a way to use the right messaging, I'd say. But it's a work in progress. This is tough. Of like, how do you get in front of those people? What's the most competitive category? One of the most competitive categories in the App Store. It's the personal finance. You're going against major big players. Like, how do you break through that noise of getting someone to switch? And I think we will do a better job as we have more product variety, because we can talk about a lot of things and kind of hit different risk profiles. And once you come in through one door, you then check out all the other stuff. Might help. But it is an area we're hoping to like do better. I think we need to do better. And hopefully that's like, you've done 1 year, proven yourself, scaled, hardened, been through some stuff, survived multiple audits, safe, secure, shown you're going to do what you can do. And now it's time to like maybe position that messaging for the right audience, or a new audience for that.
Yeah, there's definitely messaging there to kind of blast across the ether and all the socials, and because there's a lot of very attractive things here. Another idea I have is literally on top of your head right now. We've had multiple people be like, yeah, Jason's hat is fire. You have a very good consumer product right there. And I think that if you can get to the point where you're like, hey, all right, we can start investing some money. Like, how do we meet people where they're at? You could start onboarding people to your brand by really expanding that merchandise line. And it might sound crazy, like merchandising leads to people becoming DeFi users. But yeah, you have that's a good brand right there. And it's kind of like taking a page out of the Pudgy Penguins playbook, which is meet consumers where they are by building a brand they identify and enjoy and build an emotional connection with, and then lead them down that rabbit hole to be like, wait, this is crypto, this is deep. Wait, what is this? Like, oh wait, this carrot hat that I think is fire, or this carrot shirt or whatever that I think is awesome that I wear is also a part of this company that's like providing higher yield and tax incentives and stuff. Oh wait, okay. And it's a natural bridge to get consumers, that group of people who are almost all long-term investors and don't really want to think about stuff, to get them to lead to your web page. It's a very indirect route, but I think it's something that crypto companies should copy out of the Pudgy Penguins playbook because it's working.
Yeah, we got a lot of, or an idea we got input from an investor of ours of creating even a marketplace for people to spend their yield directly with you. This used to be pretty popular in e-commerce, where you could buy iTunes like a $10 iTunes gift card for $9, that kind of thing, and say, hey, like, I'll let you spend your yield with us. It gives it a more tangible, like, oh yeah, I can earn these things. We can incentivize it. We can, and honestly, my wife is incredible at merch, and I think we can do a high quality job of the merch like I want, and I think people want. But that's great feedback. The whole ethos of the carrot. Someone asked this earlier, that it's a carrot because it's about the incentive structure, right? We want to offer people the carrot, not the stick. You want people to say, hey, I want you to come use DeFi and enjoy the benefits of it, because the benefits are good. And I know that crypto sounds like a high risk profile. It's like up on the right side of the curve. But for us in our world, like, we're like almost as far left on the curve as we can be. And what we deal with, we try to be the least risky. And so eventually that's going to become the reality for everybody of like, okay, yeah, this is stable coin. There's no direction. This is not the casino. It goes up only. They have a track record. I'm getting double the risk-free rate. Oh, great. Man, even like your best wealth rent right now is generally, like I say, like the best consumer rate that most people can get is at 4%. And they talk to everybody about it. Like, that's their big billboard. 4%. This is great. You're crushing it. And we're like, 4% makes me feel terrible. 8% even makes me feel terrible, which is kind of wild. But like, yeah, if you can package those things up and say, hey, like, own your financial future, faster, cheaper, better rates, and still give people form factors. Like, we've got a debit card we'll come out with. We'll on-ramp and make it super easy to go from fiat straight into carrot, where it doesn't even feel like token ownership. We can extract this all out for people. I think is a huge part of the future for us.
Mm-hmm.
I just have one last question, because I want to be respectful of your time. We've got one or two more quick things to talk about. And the questions that are coming in are about, what are the fees? How are they accrued?
Oh, yeah.
Where can we see details about the token? What's the best place to go for people who want to get more into like the technical and verify some of the things that you've said?
Sure. Great. One, so like on the CRT token, we don't charge any fee. I mentioned there's a 5 basis point redemption fee, which happens when you withdraw, when you burn the token to get back your stable coins. That isn't really like we make money fee. That actually benefits all the other holders as a yield source, and that's there again for protecting the protocol. But we don't take any performance fee or management fee on it whatsoever. And again, the reason is it just makes it a worse product, and the margins aren't good anyway. So like, why mess with it?
Sure. Where can people go to find this information when you leave our presence today? Like, is there a good docs website? Is there an aggregated list of the information?
Yeah, docs.deficarrot.com. We tried to post a ton of information on the use page, where you can see transparently, where the yield is, see the price of the token, see, the history of the APY. These are things you should care about, and be able to see it on a long time horizon. The docs explain kind of the methodology. I probably need to update a lot of those, ever moving target. But also on the use page, there's some links on there to, if you want to go view the program on chain, so you can like verify, if you like really want to get technical, you can go verify, you can go look at our programs of how they run and where the where the money is viewing on chain at any given time. You can even like take our excuse me, like our production wallet key pair, and you could plug it into like a portfolio viewer, and you could also verify and see all the stuff there. This is the benefit, right? It's trust but verify. Everything's transparent. It's on chain. I think we really, I hope, lead the way for being transparent of like how we report and show data, because it is so easy. It is. I'm in the weeds on this stuff, and let me tell you, I even struggle to make sure that I'm presenting it in the most accurate way possible, because it's so easy to manipulate things like APY numbers. It's so easy to manipulate different figures and stuff. And so we want to make sure that, hey, we'll give you a nice interface for it. It's pulling from on-chain data, and you can verify it yourself.
Very helpful. Do you have any final thoughts or questions or asks for us or our audience?
Yeah, I think everyone should own at least one carrot. So if you never experienced it or try the product, please do. It's connect your wallet, and Just buy one and then check it. Say, hey, does it go up over time? Yes. One caution I'll say, and there's a market price versus our NAV price. So we maintain some on-chain liquidity, and this is how wallets pick up the price. That on-chain liquidity is always at a premium or a discount based on like market swap. So if you market swap, you can affect the price, just like any token swap, because like that is an on-chain liquidity thing. But through us, like through redemption, we will guarantee the price at the actual net asset value of what it is. It is dollar based and not like USDC based. And so if the USDC like appreciates since you first deposit, you might get back less USDC than you expect. That's because USDC is not always $1. It does fluctuate, and those small fluctuations end up mattering. On large enough amount of money, and just keep looking out for us. We love ideas of, hey, what are other versions of tokens that you would love to see? We're coming out with a leverage token. We're finding our niche of where can we automate and optimize and manage a product for you that makes owning it and experiencing DeFi the same as just owning a token, to make that like onboarding and UX really, really simple and straightforward. But we're always looking for like new ideas of, hey, what other types of tokens would you like to see? What are things that we can extrapolate and make easy for you and get you like really good return. Like the point is like the return. Like we're here to make you money. And there's a variety of ways and methodologies of how to do that. There are different risk profiles. Some work in some seasons and better than others. And so we love ideas of, hey, what's a pain for you right now, and how can we help solve that for you? Because we want DeFi to be easy and accessible for everybody, to enjoy the benefits that like we know are there. But sometimes it's hard for us to even explain or take ownership or help somebody else get to where we are. And that's our goal, is to make that as easy as owning a token.
Boy, we love when you say that.
People want that merch, man.
People want the merch.
People want that merch.
And people want to know, can we maybe get an affiliate link for friends of the show? And
I totally can. We have a referral link, but doesn't really do anything. Again, this is like, we're working on an incentive program. There'll be a points program soon, and we'll have a token, and so, but the reality for every builder is you want to know if people care first.
That's right.
If people just come and are mercenaries, that does me no good. Just because you came in because I give you points and you want to speculate and do whatever. Because if you leave afterwards, I learned nothing. And, I don't know if my product's good or not. And so we held off as long as we could to make sure people care. The product was good. We can get real feedback that wasn't just, I'm farming you. So the referral link's there, but there's no like incentive of, if you get a ton of referrals, you're going to get like extra. You might. We know who you are. It's all on chain. We do track all this stuff. But yeah, that's my disclaimer on that.
Well, James, thank you very much. He is the co-founder and CEO of DefiCarrot. He is your friend and ours, JSB_Soul. We'll catch up with you again soon. And until then, my friend, be well. Thank you.
Awesome. Thank you, guys. Been a pleasure.
See you, dude.
Bye. That is JSB_Soul on X, and use.DefiCarrot, spelled just like the vegetable you love.com. Boy, what a great conversation. I cannot wait to start using that platform to get under the hood and dig in to see all the proof in the pudding. So if that's you, if you're like Joe, who says we need a mom tested, mom approved sticker for Rums HQ.
Mom tested, mom approved.
I think we need it, and I think Joe is in charge of that coalition. So if that's you, or if you've got a crypto question, we are going to take just a couple more minutes to get your final thoughts, your last questions, before we ride our dogs and ponies into the sunset. We have an announcement to get to, but before we share that, I do want to make sure, because we are about to go a little over time. You guys are good to take 10 minutes to land the plane?
Mm-hmm.
Okay, sure. Beautiful. Then can I segue over to tell our friends the exciting news?
Absolutely.
Your enthusiasm is
I wanted to see how long the pause would go on for. I was like, let's see how long we can drag this out.
Oh my God. Okay, then everybody help me out with a little drum roll. Ladies and gentlemen, we are pleased to announce that your friends at Rise Up Media, aka all of us, have been accepted into Epoch 9 for Octant. What the heck does that mean?
Words.
It means words. Okay. This is not going to be a Dennis Porter announcement. no shade, Dennis, where we hype you up, build you up, Buttercup, and then you're like, that's it. No, this is a cool thing. Octant, if you are unfamiliar, and that for people in podcast land is OCTANT, is a 9 to 10 seasons deep, self-sustaining global public goods funding ecosystem. In a bumper sticker, they make it possible for people to allocate money to causes by matching funds they've raised and do a little magic on top with the power of like DeFi, okay? So that even if you're like a shrimp and you only have $1 to vote with, they can multiply and match the funds of people through something mathematical called quadratic voting. This is a very cool crypto-enabled way to ensure that the projects we believe in, whether that's our community, our country, that they get the support that they need, that your vote goes as far as somebody like Jeff Bezos, who could, influence the election with his sizable power and money. It's very important. They've funded a lot of really important crypto products, including people like our friends at Pizza Dow, peace, love, and pizza kind of thing. And they are now doing an Epoch to fund creators who can help them tell a better story about crypto. So we're very, very pleased to get a chance to be alongside a lot of really noteworthy, passionate, powerful folks like our friend of the show, Brooke Lacey, who got accepted into the Epoch, like People Pleaser, who is now an Emmy award-winning filmmaker, and so many more. Everybody yesterday in the opening call was talking about how important it is to tell a better story about crypto. And I am just thrilled that we get this opportunity. So do you guys want to talk a little more about like what it means, in terms of how it will, what we'll be doing? It's kind of, business as usual for us. We're always telling the story of crypto, but hopefully we can get some cool guests. Maybe we can bring some more people into the community. What do you thinking this means for us that'll excite the people here more than a Bitcoin friendly government?
Well, Alex had his finger up, so I'll let him go first.
I was just going to say the thing that I'm the most excited about is the chance to. You okay?
Yeah, the comment came through from I Am Ray Todd that says, Alex, so you're not pregnant.
Sorry, Rug.
Sorry, guys.
Yeah.
Go ahead.
Is a chance to network with all of the other creators that are in this, and there's a lot of really good ones, but there is a name that really stuck out to me on that list, and I feel like you would have said something if you saw it, Evan. It starts with a Z.
Does it end with another letter?
Zebra.
It's Zach XBT.
Oh,
Zach XBT is in this cohort?
Damn.
Yes.
Are you kidding me?
They tagged him in the announcement
What?
yesterday. Yeah.
Dude,
Wow.
we're not going to get funded at all. I'm encouraging everybody to just go vote for that.
I'm curious as to exactly, because he's not like a content creator. He's an investigator. He's an analyst.
But the content he creates tells an incredible story and helps a lot of people learn about ETH and the ecosystem and blockchain. So a quick note about funding too is I said quadratic funding, but what the hell does that mean? One of the cool things about this is people who participate by staking their tokens with Octant get the right to vote on who should receive the matching funds or the funds that people allocate. And they have set it up in such a way that nobody can receive more than like 20% of this pot. So even if we all love Zach XBT, and we do, and we decide to vote for him, the other 30 creators of like all the hundreds of applicants will still get matched with funds according to how people vote. So like it's a very egalitarian, democratic sort of cool process. So seriously though?
Yeah, so Zach XBT, he will get 20%. He will get 20%, and then the rest of us will fight for the remaining 80% of the funding.
For people who want to know if you can support this, at this time, the best thing you can do to support us and help the community out by talking about this is by talking about it. Go follow Octant at octant.app on X. They've got a Discord you can join. And then you cannot vote for us if you are not already like staking funds to participate in this voting system. But that should not discourage you from putting some of your money there if building the future of crypto is something you care about and want to be rewarded for participating in.
Well,
it is, go ahead.
I was just like you said, you can absolutely have a pretty significant impact by being present and just talking about it and expressing a desire to, see us do more and that you're excited to see us included and all that good stuff. Because we may have built quite a bit over here, but we haven't built as much on Twitter. And so this is a huge opportunity for us to get a little bit more involved with all of the people who exist there to help us with the mission of bringing more creators to other platforms, where all the people are. So the more you comment, the more you post it all helps, and it's really appreciated.
And it'll also change not a single thing of what we talk about here, because it was just one of those things where if they give us money, they're like, all right, cool. Now tell a better story about crypto, guys. And highlight in particular, like all the stuff that we're doing across the entire Ethereum ecosystem. We go, oh, well, we do that anyway. So we'll keep doing that.
Exactly.
Yeah.
Right.
We'll just keep doing what we're doing.
But hopefully in an elevated way with some of the folks from this cohort and also from around the Ethereum ecosystem. Could you imagine Mr. Ethereum himself, Vitalik Buterin, on the Rise Up morning show?
That would be pretty wild. It would be like talking to an alien, I feel like.
A very funky alien. Have you seen his like cat pajamas?
Yes, I have. Yeah.
Got so much drip, Vitalik. Okay, so that's the cool news. If you want to support us in that, stay tuned. We'll be posting more on X about it. We'll be inviting the others to share what they're doing so that you can have a real role in bringing the story of crypto to a broader audience. That's what we're doing here. We're trying to help people get in touch with the movement, the Web3 movement, and you are a big part of that. So thank you, my friends. Guys, have you got final thoughts or predictions or suggestions for DeFi protocol names related to fruits and vegetables before we ride our dogs and ponies into the sunset?
I have no final thought, except I think DefiCarrot's super cool. I've never thought about having something that could earn me air quotes yield, that I could also turn into a better tax incentive, and have a better tax incentive around, as well as also being an asset I could maybe one day take loans against. Like, it's fascinating. I've never even thought it was possible, because in my head there was just like a brick wall between those possibilities, and that's super, super cool. So I know, man, the DeFi space is so awesome with what everybody's building. It's sick. I don't know. That's it. I like DefiCarrot a lot.
Correct.
Alex, what about you?
No, I think it's really cool. Someone was asking for my thoughts on it as my final thought. To be honest, I mean, the Snore actually pointed out the only weakness that I see in the whole thing, which is one that every single protocol shares in the entire industry, that if you can't onboard users, it's going to struggle. So the model depends on onboarding new users, which is exactly, I assume, Will, don't let me put words in your mouth, but why you mentioned good growth in marketing and messaging strategies, because obviously that's the single most important piece. If that stops, then the party stops. But I struggle to think of any other protocols that could continue to exist and do their thing if they weren't also onboarding users. So I mean, that's kind of the name of the game. In that sense, it's interesting. The process was unbelievably fast and easy. It took me about 15 seconds to test it out and throw a few USDC in there to buy the single carrot.
The single carrot.
The single carrot.
Yeah. No, I mean, it's cool. Like I said, the reason to keep inviting all these people is just because there are so many super cool things that don't get the time of day because marketing and messaging just basically doesn't exist. People think that they have a strategy, but it's really turns out that it's just void posting, into an echo chamber of the same 10,000 people forever and calling it a day because, I don't know. It's cool. It's super cool it actually also gave me a new idea for blockchain Basecamp. I added a yield aggregator.
Nice.
Stablecoin yields.
Hell yeah.
Before he makes me test it again.
Yeah, make Evan test it. But I'm just sitting here and I'm being like, man, once Jason's able to get some real revenue churning out of this for them. Oh yeah, James. I said Jason.
Yes, it happens.
With James is just dude, if he can get the merchandise branding down of that is such an amazing opportunity to just sneakily onboard people. it's going to be awesome. He could have like a whole actual clothing line like blow up from that. It's like it's right in fashion. It's a good like he has a real good opportunity there. Yeah, I hope he does it. Man, I hope he does it. That'd be sick.
That'd be fun.
Beautiful. My final thought is to say, don't forget, we got another great episode coming up later tonight. We have Rise Up After Dark. We've got our friends from Opacity, DeWoofy and Sophie joining us. We're going to continue the conversation about user experience, Web3 marketing, get Sophie's take on it as a professional marketer who made the transition from Web 2. And of course, we're going to answer your crypto questions. That's live, 7 p.m. Central, 12 a.m. UTC. And wherever you are, whenever you listen, you can get the link to all of our socials.
12 p.m., 12 a.m.
12 a.m., 12 p.m. Sometime wherever you are, whenever you listen, at RumsHQ, RUMSHQ.com. If you haven't checked out the recorded episodes, you haven't checked out the free resources we have there to help you get started, or most of all, the Rise Up community. My friends, if you're trying to learn crypto, or if you are building a crypto protocol and you're not like in a community where you can meet other crypto users and also like everyday people, the heck are you doing? Get in there. That is the alpha. It's the best, fastest way to save the most money, accelerate your learning journey. And the only thing missing in our crypto community is you. We would love to see you there. And again, my friends, thank you for being the very best part of what we do. Until next time, everybody, stay safe, be well. My friends, rise up.